Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday, the 13th of February, 2023. Now, I'm going to remind you of something. Tomorrow's Valentine's Day. Ladies, gentlemen, don't forget your loved ones. All right. Now, there's another big event before we get into everything, and let's go right to that and talk about it. We get the CPI numbers tomorrow, and these are the forecasts, up 0.4 from the prior months, up 0.1. Core CPI expected up 0.4 January compared to the prior months, up 0.4. CPI's forecast up 6.2% from the year ago month, and the core year figure of 5.5%. It comes out at 7:30. But what this doesn't say is the weighting of the indexes changed. They've gone back to 2021 to look at the BLS, the Bureau of Labor Statistics, how people were spending money. Then they used some numbers from 2022. What I don't get in reading it is why don't they just use all of 22? It doesn't make sense. Why are they going back a year before then? Again, I don't understand some things the government does. The logic tells me I want the most reasonable data in a one-year period I can get. It's right in front of us. They have all the money in the world. They have the data. The weighting is going to change for used cars, which they felt had a bit too much weighting in the last report, and they're putting more weight on rent. So that's some of the changes, and there's other weighting differences that are going to come in. So do we really understand the numbers as they come out without them being explained to us is going to be a big issue tomorrow. And of course, the biggest issue is, are these going to be hot, lukewarm, or cold numbers? One of the three is going to happen through here. JP Morgan still comes out and telling their traders they're better off in some fixed instruments right now than the stock market. They don't think a recession's been priced in. Well, the reason it's not been priced in is because the economy is so strong in the labor market, it's hard to price in much of a recession. That is the reality of what's going on. Now, if these numbers come in lukewarm to cold, JP Morgan's argument's not going to carry a lot of weight. That's going to carry a lot of weight if you get a hot set of numbers, because then this rally, or whatever you want to call it, we've been doing recently, comes under attack. Interest rates jump, the dollar jumps, markets go down because of it. It's going to get interesting. Remember, we get Coca-Cola tomorrow. There's a bunch of companies reporting tomorrow, so you want to keep your ammunition ready to go with this. So let's go to the charts and take a look. Now, I was going to remove the SPY today, and I said to myself, why? I think if there's ever an important day to cover it, it's tonight and then tomorrow, and then I can take a look at other things that we want to cover by dropping it. But I think we want to go through the CPI number, take a look at it tonight, take a look again tomorrow, and what did the CPI numbers do? In the meantime, all the stock indices came in hot today. So the market is thinking, nah, even with the revisions, it's going to be more in the lukewarm to colder number, not the hot numbers of CPI. Otherwise, why would you be up today? When we look at USO, XLE, you can see some pressure there. ARC joined and flipped around today. It had gotten down to 38.57 as Tesla was under some early pressure. It came back. Rivian came back today, too. It came off its lows, closing closer to the day's high, but it's at an important area. What was interesting about ARC is it's up today while Tesla's down. Now, they're not only part of Tesla. Remember that. They have a lot of other tech companies, and tech has been on fire. When you look at automakers stocks are on fire because sales went up. And as I'm hearing early numbers, like a 16% increase. And generally the Super Bowl kicks things off and gets them going again because traders get to see so many things they haven't seen in the ads. One of the weak areas continues to be in AMC, doesn't seem to be able to get out of its own way. So when I sit here and I take a look at SPY, you have what I'll call distribution taking place from this high to low, just marching around in there. The current short-term pattern is lower highs, lower lows, which is bearish. However, the market is up and over the 18-day average of closes, and as I back this off, which I want to do right here, this is how the market was on Thursday, the last time you and I saw this because we were on the weekly charts over the weekend. The goal was, if the market fell, to find support in the first test of the 18-day average of closes. Tell me that didn't exactly happen. It's what happened to a T. The market had been running the upper Bollinger Band and then flipped over to lower highs, lower lows, and lost the embedded reading. Now, we can also take a look at this, which is often very important. When you lose an embedded reading, and this is in that course, it's on our website. You can take it there just by going under education. When you lose that, you're often going to make a run to the 18-day average of closes. Watch. Here you're embedded. Here you lose it. If you don't get it back right away the next day, the odds favor you're setting up for a test very quickly of the 18-day average before you get back over a recent high. Kaboom. And right into those numbers. So feel pretty good about that. UGA. This is the gasoline that we've been talking about. So I've gotten what I want on the first leg. When I did my report over a week ago, it was in this area. I said, I think it'll get back up and fight a battle at the 18-day average. And that's where you want to start the pattern, come up a little down, and eventually get that thrust to the upside going into the warm weather sometime late March, whatever the case may be, where you get the demand coming on board for all this gasoline. And I still think that is going to be the case. In Apple's very overbought. It lost its embedded reading here. It hasn't hit those numbers. Now, it tells you that it's very strong if it can get over this number again before it gets under these. If it stalls here and starts down, then I'll be looking for this market to come right back into those numbers. It's a dangerous chart right there. AMC, interesting. You had the news, you had this, remember they talked about we're going to increase now the price of seats. And the market took off on that news, and the market rethought it and said, so maybe that's going to keep people away from the movie theater. I brought that up in 48 hours to you. Do you really think it'll make revenue? I want to tell AMC this, if somebody would listen. Put into the longer movies an intermission, a break. People are going to go to the bathrooms, and they're going to buy more condiments. Your profit center, big time, is selling that popcorn, that Coca-Cola, those candies, food, whatever it is. Give them a chance to have a hard drink if you have that in there, and then have them come back in. You will find that that is one of the ways to do this. I remember as a kid, they used to do that all the time in movies. Of course, you'll say they were winding it up and they had the piano in there at the same time. It's not quite true. All right. Higher high, lower low. No trend at all in the financial services. You had lost the embedded reading. We can take a look at this one too. And when you lose it, you know what I'm going to teach you? You're going to make a run for the 18-day average. Bingo. You're neutral as can be going into the report tomorrow. So now what do we do with it? I wait and see the report. Thank God it's 7:30. In the morning, at 9 o'clock, by the time I start recording for my subscribers, buy here, sell there, this is what I want you to do. We'll have the CPI. It'll be fully digested. I don't care if it's bullish or bearish. I'm just going to look for trade setups. That's what we do. And we dissect the charts. We rip them into this, and we come up with ideas. Lower highs, lower lows. Last rally high here was 103.08, and today you got to 103.13. So while it looks like that, I'm really going to take this arrow, have it point up from 101.08, and you're not trending anymore. Now you have a higher high and lower low pattern. In stocks, didn't quite make it yet to the on this. You lost your embedded reading. You haven't hit the 18-day average. You made a run at it. That doesn't satisfy my count. I want to see this market down at that 18-day average. We'll see if it can do it before you get back up here. I think it will at this point. In the home builders, you lost your embedded reading. You made a run. Now, I can't argue how close this one got. Do I care if it hits it exactly? I want to be right in the ballpark. You got to 68.37, 67.94, and when you lost the reading, you were all the way back over here. So you've gotten most of the run in it. Would I like to see it hit the 18-day average? Oh, you can count on it. That's the number I want to see it go to. On the energy sector, so on the energy, I was telling traders today that I think the 18-day average is now the battleground. I think that the pros are trying to buy it on pullbacks into it, looking for the upper Bollinger Band with stops right back here if the market clears this particular low. And that low, I'll tell you where I think that they're going to put their stop, is 86.74. One tick under that 86.75 number, looking for 93.03. In the gold market, I remain fully committed to the bear side. Now, that can change if the CPI kicks the dollar tomorrow lower, not higher. Kicks it down. It's got to press it lower. Then maybe you take some pressure off commodity markets. But if the CPI reading is such that people think that there will be further Fed hikes, the dollar, in theory, should get stronger off of that. It should immediately impact all the metals in a negative manner. And they have been coming down. Big support in silver comes in 1996 to the lower Bollinger Band of 1979. Trend is still down, and you might even embed here with the action. In the copper market, oversold, riding the lower Bollinger Band. It needs China to buy copper, more copper, and it hasn't been doing it. That's what's hurting that. Then we get to TLT, BND, and the boys. And remember, this is going to set the tone of things to come, at least into March. Now, the beauty of the FOMC meeting in March, in reality, is you're going to get this report, the CPI report, before that comes out. You're going to get two looks at CPI. Obviously, you're going to see continuing jobless claims and initial claims coming out over and over, and we're going to get another jobs report. But the importance of this CPI is it's the new weighting method. And that's going to weight things in a more accurate manner. What does it do to the market and what kind of numbers does it present? That's what everybody that I know that's an economist is looking to see. On UUP, you're very overbought. You've hit your upside target. You keep running to the Bollinger Band, not going anywhere, while FXE, the flip-flop of that mirror, bearish and seeing it. Do you think these two markets, the dollar and the euro, aren't going to be immediately impacted tomorrow? You'd be sorely wrong. I'll be all over the futures markets in it, telling my traders what I think they do. But first, you got to get through the report. You want to be very cautious going in. I don't like going through all these all-important reports. And if you think CPI this time isn't the big report, it's the granddaddy of this particular week. We do have PPI coming out, I think, Thursday. So you want to keep a look. It's either Wednesday or Thursday, but it's not going to be as important as CPI. So keep your eye on this one. That's going to take you where you want to be. Now, you keep hearing me talk about what I do. In the morning at 5:30 a.m., actually, I'm starting earlier. I'm about 5:15 a.m. Central Time. I'm recording because I want to get my updates out to you shortly after 6 a.m. at the latest. I got to render them, and away they go. So they're very quick. I got to record, render, and post. It's that simple. If you do a 5-minute recording, it typically takes 5 minutes of rendering time. But once you're done with it, it's in your hand, and I'm showing you the makeup of a trade. So it's not just, hey, buy here, sell there. I'm giving you the reasons. I'm explaining the whole thing as it's there. And often I'll take you both to the daily and the weekly chart for verification as to what's going on. Do I like putting out a lot of recommendations? I do. All right. The more I can get, the better I feel. But they got to fit the criteria. And I'd rather put out 0 than not. I cover all the spiders, ETFs, and stocks. Remember, a lot of stocks, and I'm rotating all the time, such as the gasoline fund is in there. We didn't have that there just a short while ago. So you put it together, you're trying to come up with game plans for everything, and I think we've got it. So how do you get this? It's simple. All you need to do is go to my website and just go to the area of research. It's all explained. You can click up here at any time. You'll see a cursor at the very top of the screen. Give that a click. It'll take you right to the area. You can call my staff. Join us. That's the key. This is like a club. And when you're a member with me, what happens is, let's assume you have some stock or ETF that you want a question on. Tell me, hey, Ira, what do you think of this? I write you back. Do a short video, typically 30 seconds, and do it, my time allowing, obviously. But I'm generally, I don't know of any I haven't done. So that gives you an idea. I get my work done. I'm a workaholic, so I get a lot done for you. That's also included. Give it a try. I'm Ira Epstein. You have a great day. I can't wait for tomorrow. Hope you can't. I'll see you tomorrow.